In this video, I'm going to talk about two trades, how that Apple cash secure put trade ended, and a Money Monday revisit of my Bristol Myers trade that I sent to the members. Stick around. I know you're going to like this one. Hey, welcome back, everyone. It is time for another red hot covered call video. Well, hey, look, that's exactly what we're going to do today. We're going to talk about Apple and how I closed that trade that I talked about in the last video, where I was talking about using my 401k, using one stock generating close to $18,000 for a month. Well, I wouldn't have generated $18,000 on that one trade, but we had made money. And I'm going to show you how that trade played out and why I closed it early, although it was going to trade this coming Friday, January 27th. And I'm going to show you a Money Monday revisit video where we're going to talk about Bristol Myers. Last Monday, I showed the members, look, Bristol Myers is trading in such a range. Absolutely love it. We're going to knock it down. We're either going to use a covered call where we buy shares, or a poor man's covered call where we buy a leap and we write the near-term covered call. I'm going to show you how that trade's playing out, because that is a real Money Monday video I sent. And oh, by the way, the markets were closed this past Monday, so members were able to jump in on Tuesday if they elected. And Bristol Myers absolutely bucked the trend of the stock market and kept going higher. I'm going to show you exactly why I thought that was going to happen. Hey, look, we talk about cash flow here, monthly cash flow. I'm in retirement, and to be honest with you, I need to generate monthly cash flow to live the good life. And that's what I've done over the past 5 and 6 years. I've been coming back here on YouTube, showing you my trades. We talk about them, so maybe you learn something. Okay, that's what I want you to get out of this video today. It is free. I don't charge you nothing. So look, if you like anything you hear today, I want you to subscribe to the channel. It's right there. It's free. Come back, show you timely and relevant selling premium trades to maybe up your game. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. All right, before we get to those two trades, I want to show you that the upgraded CTP dashboard was updated. And I'll tell you what, there's a lot of great opportunities out there. Look at all of those new stocks added to the upgraded CTP dashboard list. This is an interactive dashboard where you can actually click on things that you're watching. You can then sort all of the data. You know, a lot of times members sign up to get my daily emails, my weekly blogs, my videos, all the exclusive things that come with a membership. It's really the flagship of the membership, is to have access to this weekly updated dashboard where you can find all of these different stocks, the best trading stocks now. You can do your research. Head over to my membership, cptdashboard.com, click upgraded dashboard. I give you 1 free month to sign up. I'll tell you what, man, so many people have been signing up because they want to have access. Go to cptdashboard.com, click upgraded dashboard, get your 1 free month. Would love to welcome you aboard. Let's talk about that Apple trade, right? This would have been my first IRA trade, right? Remember, I retired December 13th. I have transferred my 401k money into an IRA. I plan to use a large chunk of that money on one great trade per month, trying to generate $18,000 a month. Okay, this trade would have been my first one. I've talked about that. It's a hypothetical trade, but I actually did this trade. In my tax-bearing account, I did this trade on 100 shares of Apple. We used the cash secure put, where I'm going to put up the money to buy somebody's shares at a strike price. I'm going to give them 30 days to think about it, and they're going to pay me a per share premium. That's a cash secure put. Okay. For anyone that wants to take me up on that offer, it's insurance for them. If Apple were to fall below 130, they're getting 130 for their share. Okay. So that's insurance to them. So we, as cash secure put traders, we're providing insurance to somebody out there. Now, I'm willing to own Apple shares at 130. Okay, so they're going to pay me that per share premium, and that happened to be $3.90. Now let's go to the Wayback Machine and talk about why I decided to make that trade and why I closed it early. This is where I make that trade. Apple is trading near 130. Okay, it's falling just like the rest of the stock market. And I'll tell you what, I had recently seen it trade at 170x, and Wall Street loves to buy Apple low. They always buy up below. I mean, it's trading up here. It falls. It's trading up here. They buy it to sell it, to sell it, to buy it. That's what they do with Apple, okay? Apple has not traded near 130 in a year. So when this thing peeled back, just like the rest of the market, it's playing, and next thing you know, it gets down to 130. Now, I feel very comfortable at 130, so that's when I elected to use the cash secure put at 130, and I figured, look, I'd roll with it for 30 days because I just feel like this thing is not going to go below 130. And even if it did, I'll use Apple to write covered calls. Well, this is where I did the trade, and look what happened. Apple starts to rally higher with the rest of the stock market, and I'll tell you what, it ends up my $3.90 premium. Remember that? $3.90 premium fell all the way to 33 cents. Okay. Now, 33 cents for the next 10 days. I'm not going to sit there on 33 cents for 10 days. No way. We're going to buy this back, meaning we're going to give 33 cents for my profit of $3.90. We're going to buy that obligation back. Now my cash is ready to rock and roll for another trade. This is what I call taking advantage of opportunities. Look, there's a 10 to 12 day window over the next week and a half, but I'm sitting here with so much profit in this trade. Mind you, that trade would have profited me over $11,800. Because remember, I did it on 3,000 shares, knocking down that kind of money. Here's the deal. We did not make that kind of money. It was a hypothetical trade, but had we done it, we wouldn't have made that money because I bought it back, gave back 33 cents. We still pocketed damn near $10,500. Now, I know for some of you, you might think that's too good to be true, but that's how selling premium works. Okay? You pony up your money. You tell the greater stock market, look, I'll buy your shares at 130, and you give them a time frame. That's 30 days. And to be honest with you, they pay you that upfront per share premium. And in this case, it was $3.90. Took it off the board early. But again, why did I take it off early? I look at it as opportunity. This is opportunity, man. There's literally like 10 days here to work with. I could now either use the cash secure put here, right? I could say, okay, give me that 135 strike. I mean, it's got this little pop here, and you could see it's breaking resistance right about here. So I could say, give me that 135, whatever that pays. But again, I have added, or the way I see it, I've added to my time bank, right? 12 days, I would have waited for 33 cents. Well, we take that off the board. Now I have an extra 12 days to generate some cash. Maybe I do the 2-week cash secure put at 135, pick up another little crumb. I bet you going to be about $1, and I'll take that buck. That's how you have to think about this, okay? Don't worry about how I handled the trade. What I want you to do is think about using opportunity. Some people out there tell me all the time, man, you buy back your options way too much. I let them go to expiration. Look, you can do that, right? I gave this put buyer the opportunity to stick me with their shares at 130. Okay. I gave them 30 days. I could have waited for 30 days, but think of it like me. That is literally 12 days of time that I am going to use to my advantage. Okay. It's just not, 33 cents for 12 days. We'll just let that go. No, buy it back. You pocket the cash flow now, and you look to use that extra 12 days. Hey, what if I pick a nice 45-day trade? Adding time to that new trade could add to my premium, right? Say I want to do another trade. Okay, we're looking at the 135 strike, and we put it out for 45 days. I'm not going to get 390. I might get 450, 460, 70, 80, or even 490. You have to think of it that way. Always use opportunity to your advantage. And hey, look, take crumbs when you get them. This Apple trade is successful largely because I sat back, looked at when Apple last traded at this mark, looked at that as an opportunity, and we went ahead and went with it. But more importantly, putting that much money on the line, it better be a good stock that I'm willing to hold. And Apple clearly is one of those great stocks that I'm willing to buy, hold, trade. Okay? Number one golden rule of cover call writing: cash secure put selling. You better want to own the stock. All right, so let's talk about that Money Monday trade. Bristol Myers has been trading in such a range. I wanted to show the members that I have my eyes on Bristol Myers. Now, do know I have about 500 shares. Actually, I think I have 1,000. I love using Bristol Myers as my buy and hold, but what I love to do is every chance I could pick up that extra dividend using a covered call premium, we love to write that covered call at the top side of its trading range. Now that's very important because I don't want my shares taken away. So what I love to do is write a covered call at the top of the range, and as the stock peels back, I get to keep the entire premium. And it's a little game I play, right? And what I try to do is double my dividends using a covered call premium. Well, when the stock is trading at the bottom of its range, this is when I like to let the members know that we have a chance for a cash secure put or a traditional covered call where we buy 100 shares and we can actually have a 30-day trade that is profitable and for the most part, a little more comfortable than other trades, right? Because Bristol Myers is a great S&P type company, profits, pharmaceutical, so on and so forth. So this is what I did. Back on Monday, last Monday, I did a quick video for the members talking about what I'm seeing with Bristol Myers, right? Seeing the world through my eyes. And let me show you where Bristol Myers was and where it's at today. Because as you could see, Bristol Myers is absolutely knocking it down. When I sent that video out, I think Bristol Myers was trading around 70x, maybe 71. Talked about a trading range that is damn near bankable. I tell you what, you could even go all the way back to here. Love that trading range right there. That's what they call support. Wall Street is testing this number, right? They run it up, but they're testing it, okay? Unless the markets literally belly up and the markets just fall and support lines are out the window, these are nice and comfortable support lines Wall Street will work with. And a couple things to notice here, okay? Notice that here is a nice support line. Okay, it's not a near-term support. It's kind of a long-term support here. Also notice that here is your resistance line. See how it goes all the way back? You have both support and resistance, and now it's breaking through resistance. Again, this is an S&P type company, right? It's a slow mover. So when it breaks these lines of support, Wall Street likes it. They feel warm and fuzzy, right? So this is what I love. And this is what I noticed. I noticed that trading range right there for 30 days, and as it breaks above 73, 74, we can get that 75 strike, because if it stays above that line, that resistance line right there, it could become new support. And the reason I like this line is really because when we go back here, right? When we go back here, let me draw a straight line. When we go back here, this was actually support before, and then it became resistance. And now you can see it's broken through. Okay, so these are the things we're looking for. So where does Bristol Myers go from here? To me, it's more likely that it's going to go towards 75 than 70. Now, it has had a nice run. Don't get me wrong. It has rallied. And now it could peel back. But if it does peel back and we're buying shares down here, okay? And remember, that's when I sent out the Money Monday video, when it was trading back there. We have a little bit of a cushion. And now with the stock trading at almost 74, we would have picked a 75 strike, picking up about 80 cents. That move right there is a very profitable 30-day trade. But even if we'd have played to 72.50 and picked up $1.80, that too would have been a great trade. Because look at the cushion we have now. And to be honest with you, as it moves above resistance, it may find that it continues on this route. Look at this. If it continues on this route higher, as you can see, it could bounce off and just continue to move higher, okay? So Bristol Myers, I believe, should be trading higher. I don't know why they sold it off here. I have no clue when they kept Merck and Gilead up here. But what I know is this. I've been trading Bristol Myers since 2011. I hold it. I love it. And yeah, it's going to have its ups and downs. We see that. It's just like every stock. Look, people tell me all the time, oh, Apple, look. You can find great stocks, great companies. You have to have that ironclad stomach to deal with such falls here. But the one thing I take solace in is this. I'm owning a great company. They pay a great dividend, and they sort of trade in these little ranges. And when they trade in little ranges, we can use those stocks to generate near-term covered call premium. And that is the game, right? That's what we're here to do. Generate that monthly cash flow using great stocks like Bristol Myers. Now, before we get out of here, I sent a revisit video because Bristol Myers had made such a move in that week that I wanted to answer the question, is it still a good trade, even though it's trading around 72, 73, 74x? Well, I thought it was, and I told the members what I would do. That's why I want you to go to cptdashboard.com, click Upgraded Dashboard, pick up your 1 free month. Would love to welcome you aboard. But hey, look, the Facebook group, absolutely love posting on the Facebook group. And if you had a question, you could actually send me an inbox. Hey, look, it's all about trying to up your game. Becoming a member allows you to take a peek over an active, successful trader's shoulder. And I'll tell you what, it's all about upping the game, putting cash flow on the table. So what I want you to do is subscribe to the channel and bang that like button. It lets me know you like what I'm doing. And what we're doing is this. Next video, I'm going to show you an actual real trade with my 401k, which will be my IRA money. We're going to take all of the chips and place it on one trade. Yeah, that's right. All of my eggs in one basket. Of course, you know my backstory, and it's not all my eggs in one basket, but we are going to take a very large position in a trade to generate $18,000 in the month of February. So come back. I want to show you that trade. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.